So we love in this country, for some reason, to break everything down into different generations. I'm a card-carrying member of Gen X, I believe you are as well. Gen Y, the millennials get all the attention, and of course the baby boomers are still a huge demographic. Do you see any major differences between the various generations of how they're managing their credit and their debt right now?
You would expect this to be the case. Younger people are spending more on credit, and they're pushing their limits a little bit more. They're trying to start households or buy households or pay off their student loans. The boomers and the older generation, for the most part, their debt is flat. The thing that worries me the most is younger people in their 20s and 30s. Credit card debt is up about 10% year over year for that group, and that's a lot. And if you look at their mortgage debt, that has shot up tremendously, about $15,000 in a year. That's because housing prices are up, and if you want to buy a house, that's the game you have to play right now. But that's a lot of pressure for a young person.
Right, it did seem like 2017 was a year where the millennials finally started to buy houses. They became the largest group of consumers buying homes. They maybe have waited longer than prior generations, but now they're at that point in their lives where they're gonna have a family, they wanna buy their own house. Does that explain the rise in credit card debt? Because you buy a house and you wanna fill it with new furniture and all that kind of stuff.
Yeah, that household formation costs you a lot of money. It's the worst part about finally signing on the dotted line at closing. All of a sudden I need $15,000 so I don't have an empty house. There is an economist who I trust a lot who says that demographics are the story of the US economy. And the reason he's most optimistic is what you just said. So there are all these millennials who are living with their parents, living at home, way into their 20s or even their early 30s. That force has now been unleashed on the housing market, and it's the largest group of housing buyers right now. And as they are, it's going to help not just the housing market, but Target and Sears and certainly Amazon, any place else that helps people fill out their houses and gives them a chance to spend some money to make a home.
Right, so this group, they came of age really in the middle of the Great Recession or right after, so they're very debt averse, at least historically they have been. Do you think that they're going to be better at managing their debts than, say, the boomers were?
Boy, I hope so. They'll be a little bit more like that Depression-era parents.
The silent generation?
Right,
yes.
Yeah, who were just afraid to spend money and very conservative about it. And you know, I know for sure when you look at some of the research, these people hate the idea of they're afraid to buy houses for good reason, because they were the first generation in half a century who realized they could lose money on a house. So they don't tend to overextend themselves like the prior generation did when they buy a house. It used to be pay whatever because you know you'll get it back. Don't worry, it's going up 20% a year. I think they're not going to fall into that trap, and that's a good thing.
So no offense to the millennials, but they're starting to get older, right? So there's the whole Gen Z that's coming up behind them. They're in college now. Are you seeing anything in how can we draw any trends of how they're spending money?
Well, it's a little early for them, but one of the scary things is they're not buying cars. They don't need cars.
They have Uber, they have Lyft, right?
All that, yeah. Everything is the sharing economy to them. They can rent a car for a weekend if they want. So that's one reason that they don't go into debt. And then, you know, they've learned their credit card habits from their friends. They're not necessarily even using banking services the way that everybody else did. They're Venmoing money back and forth to each other. And so that's going to be a really big problem for the banks to figure out how to service that economy.